And we're live. Welcome. I'm Zach Miller, Tearsheet's editor-in-chief. I'm joined by Larry Diamond, co-founder and CEO at Zip. Do you call it Zipco or Zip?
I like Zip. It's simpler, but
Yeah,
the,
Zip
the
is
technical business
very
name
tight.
is Zipco.
Okay. And this is the first Tearsheet Live session that we're doing. And so, Larry, you're our esteemed guest. Um, Want to tell us a little bit about Zip before we jump in?
Yeah, sure. So it's actually our 10th birthday
Amazing.
this year. So we started in June of 2013, and
And you still got
we're
the
really
fire?
I know I've still got the fire.
Good.
I'm still wearing my Zip T-shirt. I pretty much wear it every day. Got a little bit grayer over the years, but no, the passion's still there because at the end of the day, I think we can build a really strong business around the world of financial services, doing things right, doing things better. Our purpose is creating a world where people live fearlessly today, knowing they're in control of tomorrow. And the idea is that when people use and interact with our products and they click our button, they know that we have their backs. Yes, we started 10 years ago in the world of consumer finance. Others call it buy now, pay later. And a journey that's taken us from Australia, Sydney, all over the world, and now currently in America. And over the last 10 years, growing from 0 to 12 million customers. And what I like to say is I've probably had 10 jobs in those last 10 years too. So it's been an interesting and enjoyable learning experience.
Amazing. And we have a lot of entrepreneurs sitting in your seat on the podcast that talk about those 10 different jobs, and one of which is like taking out the garbage. They normally, I've heard that said
Yeah.
a few times. Well, I think that's interesting. You mentioned sort of the geographic exposure. Started in Australia, expanded to a lot of different countries, a handful of countries, and I think it feels like you're in a process now of sort of focusing on the ones that are higher value for you.
Yeah.
Can you talk about that process, about expansion and then focus?
Yeah. I mean, we when the story we sort of like to tell, just to kind of sum up why we love the space in which we play, is that the story goes Naomi was going through a checkout on a bicycle hipster store, in 2013, 10 years ago. It's around Christmas time, and she's looking to buy a bicycle for her son, and she has a few options at the checkout. Right, option one, she can check out and put it on a credit card, and of course, what happens 25 days after statement, you get charged. And credit cards are all designed about high revolving, high interest balances, right, where it takes decades to sort of pay off. Option two is she could put on her debit card, but it was a busy time. She's buying presents for friends and family, food for the table, or she could select Zip and basically pay in three equal installments, interest free. And so when she clicked our button and checked out in December of 2013, we sort of realized the magic of the consumer finance model. This sort of triple win,
Hmm.
right? Win for the merchant who's able to
They get paid up front.
convert a browser
Mhm.
exactly into a paid customer. A win for the customer, and a win for us. And so, you know, what we sort of realized there was, and she became much more loyal to us versus her bank and credit cards. You start to build an amazing relationship with the customer. And so ultimately, that magic that we saw in Australia, helping not just big business, but small business get access to these financial tools, we realized technology has no borders. And after visiting Singapore in 2019 for Money 2020, really got the energy to say, well, if technology doesn't know any borders, and this can work in both the developed world, but equally the developing market. And so you saw us over the last few years expand into developed markets like UK and America, but we also place bets in places such as Philippines, India, and the Middle East, where you can almost leapfrog decades of old legacy financial infrastructure.
And so with that expansion also came sort of, it feels like a reckoning this year. Can you talk about, I don't know if you'd use that word, that's my word, but it looks like you're undergoing some asset sales now in some of those geographies to focus
Yeah.
primarily on your core markets. Maybe talk about that process as an entrepreneur.
Yeah. So we had product market fit, and we also had timing.
Hmm.
Often timing is not in your control, but given what was happening in the financial system, there was a big opportunity to do things better in all these markets. But I like to say, in a parallel galaxy, right now Zip has built this global
Global.
payments buy now pay later platform, and we're just dominating.
Yeah.
But as we all saw the reckoning of interest rates, which happened very viciously, we had to adjust and we had to focus on markets that were either profitable or had a near-term pathway to profitability. 90% of the enterprise value were in our core markets, right? Australia, New Zealand, America, and Canada. And so we really made the difficult decision because we spun up some of the best fintech teams in all these markets, both through a mixture of organic and inorganic expansion. We've just actually finished saying goodbye to all of those rest of world markets. We've basically sold or exited those markets, and we're now exclusively focused on our core markets. And it's producing $8 to $10 billion in GMV per year. Last quarterly was we're doing about $180 million a quarter, and over 12 million customers have sort of joined us. So we've got a lot there to take care of, and we've got a good business platform.
And I love this story because it feels to me like a lot of the best innovation and inspiration for buy now, pay later, or payments in general, I would say, comes from Australia, and exports throughout the rest of the world. And you yourself recently moved to the States, so maybe talk about your shift and focus from the Australian New Zealand market to the U.S. market, which feels like a pretty competitive market already.
Yeah, true. Competitive, but also large and exciting. I'm personally enjoying the journey. I've been running Zip globally, uh, and started out, as you said, doing all the jobs from chief of janitorial services to customer service, product design, sales. And I think it's important as a leader to be able to inspect the detail and sort of understand it. And what happened over the last 9 years is, as a global CEO, moved a little bit further away from the coalface. So it is exciting now. Moved to America last year to run the US business as well, and really getting stuck back into it. So I'm actually pretty excited, working on everything from user journeys, product sign up, strategy, culture, leadership, and hiring. But I would say, to your point around competition, first of all, the BNPL sector here is incredibly, even though it's very noisy, if you look at share of payments, it's only about 2%
Right.
of a
I
sort
was
of
gonna say
$10
2 or
trillion
3%.
payments market,
Right.
right? So it's got a long way to go. More mature markets like the Nordics, which have had BNPL for almost 2 decades now, 20% of sort of the e-commerce sector goes through buy now, pay later. So we see it as incredibly early. And I think ultimately, if you're a product and technology-led organization, you listen to customers, you get feedback, you rigorously experiment. Ultimately, our competition are the banking dinosaurs, right? And that gives me a lot of excitement because they struggle both with the ways of working, as well as legacy infrastructure. And so as Zip, we can be fast, we can be speedy, and sort of agile. So we've come in here, we've got a fantastic beachhead, we work with some fantastic brands, and ultimately we see about 100 million Americans, sort of under that FICO score of 670, who we believe are underserved by the banking community that we can make a real difference to.
I like that. And I want to jump further into, I guess, what you can export from the Australian payments industry to the US. But before I do that, I want to go back to the 10 hats or 10 jobs that you had. Um, Meeting an entrepreneur that's built a company the size of Zip, and had that legacy of 10 years, like, in a way, is each one of those jobs like, do you need to sort of remake yourself to be able to stay fresh and stay hungry? Individually, I'm talking about as a
Absolutely.
manager, as a
Absolutely.
leader.
Yeah, yeah,
Right.
yeah. I think that the most important character trait, particularly in a fast growth business, is just self awareness. Where am I at? Where am I weak? What do I need to learn? And so that's what we encourage. That's what I've encouraged myself to think that way, Pete, my partner. And so if you can do that, you can continuously adapt and work out, okay, what do we need? There were five of us, we're all working around the table. We know everything that's going on. And then we move to sort of 30. Okay, now we have to create new roles. We have to split up roles. We have to hand over hats. Um, Crumbs fall in between. And so the company almost breaks at all of these moments. And you can kind of decisively see those, right? In the beginning, we're all product folk. Then you've got to move into management. I mean, it's just phenomenal to see how I've personally changed over those years. And the guiding light is almost trying to find someone who's a little bit ahead of you, not too far ahead, right? Because at the end of the day, there's no point going to someone 5 years. You want someone who's almost about 18 months ahead of you, who has that experience to really help guide us through. And
As a mentor, you're
I'd
talking about?
say, yeah,
Yeah.
as a mentor, but equally, I would say even another business,
Hmm.
right? That is just a little bit, because all the pain that you're going through, they've just done that 18, 12 months prior, which is because a lot of the things we're sort of learning on the fly, creating um, new processes, creating a product function that didn't exist when everyone's doing everything, to customer research teams, to forecasting, to codifying our principles and values so we actually know who is a Zipster and who wants to be part of our team. And so, and equally, I think you have to be incredibly mindful of if you do reach a ceiling, right? And I've always said that about myself. If I can't keep leveling up along the way, then it might be my time to sort of step aside. Uh, and we have seen Zipsters come and go.
Hmm.
Some people don't want to go on the journey. They haven't necessarily maybe got the growth mindset and aren't willing to sort of evolve or move into different roles. But many have, and I think that's what has kept the energy and excitement in the team there along the way. It's almost like a different business every year.
Right. That's what I was getting at. I appreciate that. So I want to go back to the question about, I guess, benchmarking Australia versus the US. BNPL
Mhm.
has higher adoption rates. It's more mature there. Um, are there similarities, or are there things that you're bringing with you when you focus on the US market from your learnings in Australia? Can you address that?
Yeah, there's a huge amount. I would say, a lot of, if you look at the different journeys. So one is around the go-to-market strategy, right? I think a unique thing about BNPL is it lives in this sort of decentralized, distributed world. Customers don't come up to the front door and sign up like the banks. The power has been they sign up at checkout at that moment of truth. And so, how to build that distribution to drive flywheel acquisition, we sort of understand intimately, and a lot of that IP has come to the table. Similarly, on the underwriting and collection side, how to talk to customers, how to underwrite customers, how to incentivize customers to sort of grow with you over time. We've also been able to sign up a merchant in Australia, bring them to the US. So we're getting a lot of
Mm,
synergies, I would say, on the sales front. And then finally, the people. We're sort of cross-pollinating our teams, both with local knowledge, who understand the local landscape, the type of customer set, but equally with the subject domain expertise from back home. And we've seen similar adoption. I would say that there's still the awareness is still uh, growing over here in the US. Australia, 1 in 3 adults are using buy now, pay later,
wow.
right? And the banks have had to respond. Here, I think about 40% have actually trialed it, but you can just see the response coming from big banks, payment companies, that they really see this product as the entry point to that financial relationship. It's simple, it's easy to understand, it's on the side of customer, it's transparent, it pays back over 1 or 2 pay cycles. And so this BNPL world, which sort of disrupted online retail, that then disrupted omni-channel retail, is now actually disrupting financial services and banking.
And this goes back to something you said in your introduction, Larry. Like, I just want to maybe double click on this. Like, BNPL is a beachhead into creating relationships with customers and merchants, I guess, and it's the
Yeah.
first of other types of products or services that you can offer. Can you maybe talk a little bit about that? So, like, um,
Mhm.
because BNP, as you said, it feels like it's an enabler to do more. And you were careful in your introduction about Zip that not to introduce it as a BNPL company. Can you explain why?
Yeah. Yeah, so I think BNPL is almost credit with training wheels. Uh, it pays back over 6 weeks. You pay it back over 1 or 2 pay cycles. There's no hangover with high interest.
No revolver.
And customers have there's no revolver, and customers have really seen that. I think the banks have done a terrible job in financial budgeting. Right? If you go and get a bank account or a credit card, there's just no tools there to really
Yeah.
help you, and this becomes this sort of powerful, right, budgeting tool that everyone's gravitating towards. The sign up is really easy, and so I think the adoption has been at checkout at that moment of truth, I no longer need to go into a bank and sort of sign up. I can do it right there at the checkout. And so it sort of starts there. And but the beauty and why we love this space is payments almost becomes the access point to the relationship between us and the customer. And that's why we were so product centric and customer centric, because every transaction, well, that's an opportunity to talk to the customer, understand what they're looking for, the segmentation, how they think about their financial world. And that's really informing how we're building out our app. It starts at checkout, but ultimately we want them to be in the app. And our mission is to be that first payment choice everywhere and every day.
I like that. So, I mean, clearly, what's happening stateside is growing awareness of BNPL, and with that, there's definitely talk about regulation. Can you give us your perspective on sort of how that's going to play out, and what BNPL will look like, say, next year or the year after, from a regulatory point of view?
Yeah, yeah. We've always advocated for fit for purpose regulation. Ultimately, we do see ourselves as extending credit. It's credit over a 6-week period, and we're introducing products to provide slightly longer repayment terms for bigger ticket purchases. But ultimately, if you go and sign up for a mortgage, there's a certain amount of diligence the financier needs to do on you. If I go for a car loan, that's slightly different, less perhaps. A personal loan, a credit card, and then BNPL. And each of those has a very different credit limit associated with them, from millions of dollars to tens of thousands. The average credit card in the US, somewhere around 5 to 8 grand. I can't remember the exact figures. Let's call it $8,000. Whereas BNPL is in the hundreds, maybe 1,000. So therefore, we do advocate for fit for purpose regulation. And I think the journey that we're seeing the US go through is a very natural evolution of this new financial construct, which is to understand regulations meeting innovation, and how do we create the right safeguards in place to ensure that customers use the product appropriately, don't get stuck, and don't fall behind. So we work closely with the CFPB. We actually work with WebBank, with a federal banking charter
Hmm.
that's allowing us to innovate around the credit products, make sure that customers have the right information before they sign up. We pull soft credit checks so we can look at the credit file. We also use alternative data and all AI models, and we're also looking to add bank transactional data as well into the mix, which actually, this is one of the learnings that came from Australia. When we started Zip 10 years ago, we operated in a regulated credit environment. We started with a credit license, and as part of the requirements under the Credit Act in Australia is, if someone signs up for credit and they tell you what their income and expenses is, you have to verify that what they told you is true.
Hmm.
You can't just assume it is. And so the only way to make that real time was to ingest bank transactional data. And this was open banking 10 years ago. And Pete said to me, is the other co-founder, there's no way anyone is going to put in their internet banking credentials. It's just not going to happen. I said, well, let's give it a shot. Let's see. And we would not be here having this
Right.
conversation if we didn't get the right conversion rate there. And we actually built our business not just with credit data, but with bank data, which is the holy grail for those that are less credit active, might be new to credit.
That's really interesting. So, I also want to talk about differentiation as more players grow in the space. And you obviously have a two-sided marketplace with merchants and with customers. What's the Zip pitch to say, like, hey, work with us? I guess they're not necessarily exclusive relationships, but like, how do you position yourself vis-a-vis, other players in the space? You're
It
smiling.
depends who we're pitching. I mean, look, I still do a lot of sales,
Hmm.
so depends on the angle. But I would say that, I mean, if we just take a step back and we look at the emergence of the BNPL industry, who are the 6 largest credit card issuers in America today? It's really for the customer of yesterday.
Hmm.
You know, so who's going to be the next 6 for the customer of tomorrow? And that's where we see there is a world where multiple BNPL players can actually coexist. And we sort of define BNPL as you have to live at the checkout. You have to live in this distributed world, because you're seeing different models evolve. Some are just creating a painful form factor on their existing financial app, or so to speak. But you have to be embedded and you have to be distributed. And I don't think many companies have built that into the DNA of the organization, working deeply with sort of merchants and the distribution. But look, ultimately for us, the way that we like to explain it is, first of all, when you zip a transaction, we want that so that you can spread the cost of that over time responsibly, be that short or long duration. And so really we can fit in many different categories. Our underwriting is, we've got a fantastic chief risk officer, fantastic division that's really been built up over 10 years. Started as a rules-based engine 10 years ago when we just used intuition and traditional consumer finance rules, to now AI, machine learning models, champion, challenger, ingesting new and exciting data sets that allow you to provide that accessible credit to a much larger population. And so I think those are probably the big pieces. And we are flexible on pricing in the sense that we've got customer income and we have merchant income, which means we can actually work with a much broader category set depending on the gross profitability of certain verticals. And then finally, we don't have all the answers. When we signed up Amazon in Australia a few years ago, we did not have what they needed. We didn't, right? But you sit down, I'm an ex-business analyst, and we show them at the end of the day with product and tech, you can actually do anything. And, they believed in us and we threw 60 engineers onto the project and delivered the experience over there. So we are really a product and tech shop at the end of the day.
That's a question I have. So how often do you do that? Obviously, Amazon, biggest retailer in the world, but how much is custom built around merchant needs?
A lot of today we have made it a lot more modular,
Mm-hmm.
easy to connect to, right? So we went live with Best Buy last year. The integration's important because ultimately that customer journey, making sure it's seamless, payments are becoming invisible, how we deliver those experiences. But, over the last couple of years, we've built some fantastic partnerships on the go-to-market side with players such as Stripe, Adyen, work with Fiserv as well, some of the e-commerce platforms that really allow you to go live in sort of days or weeks. And we were the first to pioneer in the US actually using virtual card technology for integration. So rather than a full RESTful API integration, we can just generate a one-time virtual card, send it behind the scenes in the gateway and process that. Others have since got, and that massively cut down integration. But we don't stop there. That's sort of phase one. Go live, drive volume, drive incrementality, new customers and merchants see that. But there's so much more to do. And so we'll talk to them around, could be an in-store experience, other user journeys. So I think it's, our first product was for merchant got us customer, and we keep that in vein as, with our strategic partners.
Got it. I think we have time for one last question. And you mentioned before your flexibility around pricing because you're monetizing both sides of the relationship. What are some of the levers in the business, in the BNPL business, specifically for Zip? Where do you find the levers to enable new growth?
New growth. Well, I mean, so one question's on pricing and revenue, but in terms of new growth, BNPL really we see as embedded finance, consumer finance. It started life out, I'd say, in the fashion, apparel, and footwear space, where the average order value might be $150 to $200. You pay it back nearly over 6 weeks. But we've actually started to see it enter many other verticals, right? And also many different age groups. And so we're starting to see it enter travel, auto parts, healthcare, health services. We've even integrated into banks before as well, who are looking to offer this new and exciting product to their experiences. So we're looking at new and existing verticals. We're looking at new and deep partnerships. And ultimately, we see ourselves as a financial services player. So you're not going to see us necessarily build this, whiz-bang all shopping app. It's about building financial services for our target audience to ultimately drive more and more engagement with them and own a greater share of their wallet over time. Some customers want to pay later. Other customers might not be eligible to pay later or don't want to pay for this thing on credit. And we can service all of those experiences.
Larry, it's been great talking to you. Thanks for joining us on the first Tearsheet Live today.
Yeah, no, thanks so much, Zach. That was a great chat.